Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a closer look at some of the most interesting news items in the mining space this past week. Joining me today is John Fennick, founder and CEO of the Fennick Commodities Report. John, welcome to Kitco.
Thanks a lot, Paul. Always a pleasure to see you.
Now, please note before we get started that Digging Deep is not investment advice, and the opinions expressed here are our own and not Kitco's. John, M&A is coming thick and fast now, it seems. We've spoken about this in the past, but just this week we've had two transactions. Westgold Resources taking out Karora Resources in Australia, an all-stock deal valuing the company at 1.2 billion Australian, and that will set up the creation of a mid-tier Australian producer with visibility to produce 400,000 ounces a year. And also Revival Gold agreed to buy Ensign Minerals, a 21.9 million Canadian all-stock deal, which will accelerate its path to open pit heap leach gold oxide production, initially at 75,000 ounces per year within 3 years, with another 75,000 to come a little bit later on. Acquisition price there about $10 US per ounce in situ. John, M&A is long overdue. What do you make of these and some other recent deals?
Yeah, Paul. So you and I talked in Zurich about the Marathon take under, which was Caliber's win, in my opinion, and that's reflected in their share price now as we look 5 months later. So that was definitely accretive. I don't really get why Marathon bailed at that point in the cycle, but, is what it is. If you look at these two deals you just mentioned, Westgold looked very attractive to me at Beaver Creek 2 Beaver Creeks ago. They were going under a management change in 2022, and the new team came in, did a really good job, and that stock has really taken off since then. So to do a deal when your stock price is ascending, I'm good with that, because you want to grow your resources in a market like this where gold is just ripping, right? However, when you look at Revival's deal, even though I love the jurisdiction and I think he was a good leader, look at that stock in terms of charting, and you're doing a deal right now just as the stock started to move from the depths of a multi-year low, right? So like the stock was at 32 US and now it's at 24 US post deal. So sure, it's accretive, but shareholders that were loyal to that company are not feeling the love right now, I don't think.
Well, maybe that'll be a slow burner, and with the acceleration of its plan to production, maybe that's the positive, the silver lining there.
I agree. To take out assets now before we see 2,500 plus gold is smart because we're headed that direction, obviously. And I think, again, it's a great jurisdiction. I love Idaho. I have a lot of money there. It's just, shareholders need a breather. It's like when you have a rally starting like this, look at some of these names. I could go rattle off 3 or 4 that are up over 100% in 2 or 3 weeks, right? And so let the stock run a little bit before you do a financing or do a deal. I know you can't have complete control over the timing of a deal, but you do have the control over many of these financings. And I still am just shaking my head seeing so many companies doing financings right now. Let your share price run a little bit, please.
I want to get into financing in just a moment, but before we get there, I want to finish off talking about M&A. These two deals I just announced that I spoke about, they're all stock deals. Are the days of cash premiums gone? Can juniors no longer expect to get cash premiums?
I think we're going to see more of a hybrid approach. These were all stock deals, but perhaps part stock, part cash. I don't see a lot of all cash deals coming, but let's just see what happens with gold, right? We're sitting here at 2,350 gold roughly, and we haven't, directly been, thank God, invaded by any type of, people a la 9/11 or anything like that in the U.S. But if we had any type of geopolitical black swan, that would be a China-Taiwan conflict. That would be Russia, claiming victory in Ukraine, in my opinion. That would be sending gold to 2,500, I think, relatively quickly. And silver has confirmed gold's breakout since you and I last talked in January, right? And I was talking about that on that program, saying, silver's held this 21, 22 level pretty nicely, Paul. And once we get above 25, really 26 was major resistance. We're going to see it rip. And it took very little time to go from 26 to 28 here.
And now in the past week or so, we've potentially got Iran as a geopolitical event trigger, depending on what they don't do. Now, before we finish on M&A, John, if I could wave the digging deep magic wand, is there a deal that you'd like to see get done?
Wow, that's a good question. You know, I I don't have anything in particular, Paul, because I want to see these prices run. I mean, like I think U.S. gold could get taken out right now, but I don't want as a shareholder at $4.50. It's not interesting to me. My cost basis is higher than that. When you look at the chairman's, same thing. When you look at the CEO and the former CEO, same thing. So we're not looking for a 450, price and get taken out at 550, especially if it's going to be stock. We're looking at, $10. I mean, like this is a company that has 9.5 million shares out and it trades on the NASDAQ. In a good gold market, this thing's going to rip. So, that's sort of my thinking on takeovers. I never buy anything thinking, oh, this is going to get taken over right now. You know what I mean?
Yeah.
I've heard rumors about certain things and we don't trade on rumors. We trade on facts. And so like the fact is they're going to get their permit in Wyoming probably next month. And that's going to be very bullish for that company, in my opinion.
Let's labor the point. All stock deal, you could potentially change shares in a company that's not well run for shares in a company that is well run. And maybe the Caliber Marathon Gold transaction is an example of that. Shareholders of Marathon Gold have had a hard time over the last 3 years. And now they've actually, through that transaction, they've got shares of Calibri Mining. And as you said earlier, that's really starting to run. So there can be a positive in a take under situation.
Yeah, I agree with that. But I would also say that many of my peers, and I won't name them to be fair, but some of them are contributors to Kitco, loved Marathon, at $2, $2.50, and to do a deal at 46 cents US is a joke. So that's kind of where I'm coming from on that. I think Caliber got a great deal there, and I think their management is solid.
Okay, let's move on. You started talking about financing before I sort of shut that down. We've seen a couple of interesting deals this week. Rio 2 announced a 10 million Canadian private placement. That was upsized more than double to 23 million. And I-80 Gold upsized an 85 million Canadian bought deal financing, which together with the over allotment option is now or went up to 115 million Canadian dollars. Two big financings there. It suggests that the window is opening again for gold stocks.
I totally agree with that. I mean, I've seen a lot of positive news in gold stocks that was getting faded, right, all of last year. You've told me the same off camera, right? Great drill holes, barely a movement up, maybe using that as a selling event where now companies launch even news like, hey, we're staking ground around a big project or something, and the stock will go up 10% on that news in the last couple of weeks. So I think we're back to a 2020 kind of mentality, honestly, Paul, where people are Google searching gold stocks and trying to pick some winners here, which is really exciting if you're positioned ahead of this. And we have been. We took cash from December 31st from 17.5%. By February, we're at 4.5% cash. So we're frictional cash right now.
What's your view on some of these deals? And specifically, the deals I announced are both upsized considerably. And as you mentioned earlier, financings are happening at near 52-week lows or very low levels. So what's your view? I guess on the one hand, management thinks, if money's available, we should take it because you never know when it's going to be available again, versus the dilution you get with having a really, really big raise at a really, really low price.
Yeah. So I'm not an expert or a shareholder of either Rio or I-80. However, if I were to look at their capital structure, and let's say it's already blown out, which I'm not saying it is, then to do an upsize financing is always annoying as an existing shareholder because you're just going to blow up the share structure, right? You're not going to get that love in a stock where there's 500 million plus shares, let's say. Some of them have actually moved here in the last couple of weeks. But I'm talking about a U.S. or Canadian listed stock, right? If you're an Aussie stock, you see that all the time. I know Rio's news. I've been following that company for a while, and to do something here doesn't surprise me because the stock has rallied. And I'd have to check out I-80's chart to really understand, Paul. But again, if it's I don't like to see companies at 3 to 5 year lows or close to it, taking a ton of money because it's problematic. Let me give you an example, if that's okay.
Of course.
Yeah, so New Pacific, NEWP, is something I was bullish on. And then they did in November a $35 million financing. And I was like, that is a lot of money. I mean, 4 months and a day comes and people are going to hold on to those warrants. And, look at what happened with the stock price. I'm not singling them out. I'm just saying when you take a lot of money like that, there's going to be a comeuppance in 121 days in some of these stocks. And the stock just absolutely got cratered into the 80 to 90 cent range. And now it's trading just about $2. I mean, so you have to understand these kind of things as an investor. That's one of the things we do really well at Fennec Consulting, is helping clients understand that there's going to be selling pressure after a financing is closed. Count 4 months in a day, and then expect some selling pressure if there's warrants out there.
With IET specifically, there's a potentially quite a long overhang there, because that included a 4-year half warrant, I believe. Okay, let's, while we're still on the subject of money and gold companies, I did some numbers this morning. Gold companies returned about $4.6 billion to shareholders last year, with $4.3 billion in dividends and $247 million in share buybacks, led by Newmont with $1.4 billion. In terms of yield, led the way was Aura Mining at 6.51% and B2 Gold at 5.52% yield. Streaming and royalty companies deliver poor yields at just over 1%. What's your view, John, on what companies should do with their money? Gold is at $2,300 per ounce. Presumably, companies are going to be adding cash to their balance sheets. What would you like to see them do? Pay down debt, return to shareholders, buy, build projects?
I'd like to see two things. One is, if you're one of the large names in a GDX, like a Newmont, an Agnico, et cetera, this is the time to do deals. Like, don't wait another year for prices to be 2,600 gold, and then you're talking to juniors that don't want to sell because their share price has gone up maybe 100 to 200% in some cases. It's like the majors, to me, are just super slow at doing what they need to do to fortify reserves. The other thing I would say is that, coming from the financial advisor world, financial advisors love yield, right? They want to see companies that are yielding something, like you just mentioned with BTG, around 5.5, beautiful yield. Problems in Mali, so that's sort of the conundrum there. But Newmont's got a really nice yield. When you look at the royalty space, you just mentioned kind of sub 1%. One that stands out to me is Vox Royalty, VOXR. They have a 2.5 to 3% yield, and they're trading on the NASDAQ. So that's one we're accumulating here at $2, because I can clip a decent coupon, and it's a royalty company and it's well run, and management owns, I think, about 11% of the float. So yeah, I think, Paul, you and I have heard many different ideas as to what will get the gold and silver equity rally going again. And one of those things is bringing in financial advisors and institutional money, private equity money. And the way you do that is by having attractive yields, because these guys are looking for decent coupons, not just the equity.
Yes, a 1% yield doesn't really excite anybody, does it?
No.
Okay. Money's coming into the sector from other sources as well. This week, Perpetua Resources received a letter of interest from the Export-Import Bank of the United States for a potential debt financing of up to $1.8 billion for its Stibnite Gold and Antimony project in Idaho. The company is in the process of updating its $1.3 billion capex figure from its, I believe it's a 2020 feasibility study, and it expects a record of decision on its environmental permit this year. John, you highlighted a Morgan Stanley note this week that you believe is relevant here. What did that say?
Yeah. So that was launched on Monday, April 8th, and that talked about the fact that China is dominating in so many of these, commodities that aren't as obvious to the public. I can give you a few here. Manganese is one. Manganese is 91% produced in China. Okay. If you look at Aftermath Silver, they had great news February 29th on manganese, in terms of we're not just a silver and copper play now. We are 99.9% battery grade manganese. So when I see a country that's dominant like China, and Morgan Stanley sees this, which is huge, because for those that don't know, Morgan is the biggest broker-dealer globally, right? So this is a really interesting article. They're highlighting in the article mostly rare earths and titanium and different things like that are not really on the radar of some investors. And they did talk about Perpetua. That's why I brought this up. And the stock has really responded, as you've seen, which is great. And it's that kind of a news item is getting me more interested to talk to someone at the company, because that's a big deal. When you look down the list of critical minerals, though, Paul, there's one that we focused on this year in particular because of all the wars that we're seeing globally and the conflicts, and that's tungsten. So I reached out to Fireweed, who has a decent project in Canada, talking to them ongoing. But one that I started to buy is Golden Metal Resources, which is in Nevada. So great jurisdiction. They put out great news in January and February at both projects, the Pilot and Garfield projects. And I think that a company like that, or even a Fireweed, will be in line to get government money from the U.S. And why is that? Well, China, as of January 1st, 2026, cannot import tungsten to the U.S. So what are we doing to address this? This is 20 months away, and neither of these companies have a dollar from the U.S. government. And that's going to change. It just has to. The reason I say this, Paul, is that tungsten is a component in a lot of types of ammunition. So do you think we're supplying as a country a lot of ammunition to the Ukraine, to Israel? Where is this going to come from? That's kind of the gist of this Morgan article, is that, there's these commodities are trading, still at very reasonable levels, considering that a country like China is dominating.
And I think one of the other things this is doing, John, for precious metals companies, is it's causing them to look at what else is potentially in the mineral they're looking to mine, and seeing if there's something there, especially mineral or specialty metal, that can be commercialized. And, would that also lead to a pathway to alternative financing? I think it's quite interesting with Perpetua. It's been around for a long time, the Stibnite project. It's been gold. But with the rise of critical metals, the antimony element has become very, very important. Do you think that these critical minerals aspects that are starting to get exposure in precious metals projects, will that have a potentially positive effect on permitting some of these projects?
Yes. It just depends on the jurisdiction, right? I think in the U.S., with a Trump victory in November, potentially, you're going to see a lot more permitting than we're seeing in certain states than, currently. So I think, that would be one catalyst, but also just using the story I just gave your listeners, right? There is no other alternative in tungsten, right? We produced 0 ounces of tungsten as a country in the U.S. last year, 0. Where in 20 months we're cutting off our major suppliers. So what is the game plan? That's what people should be asking themselves in terms of how to build positions into stocks. Golden metal or Fireweed may not be something that goes up in a month, but look 2 years down the road, right? We're going to be in a position where these stocks are just trading higher. I don't know how much higher, but there's not a lot of them, right? And that always interests me. If you look at Mexico, we talked about this last time. Mexico has 90 silver juniors alone. There are some really good ones and some really kind of average ones. So you have to sift through all of that and figure that out. With tungsten, there's only a couple of publicly traded juniors. It's really easy.
Is the ESG aspect a concern? Because a lot of companies, they've really sort of cleaned up and taken great strides in their ESG to show they're, clean, friendly, diverse, inclusive, and all the rest of it. And now it could be the situation that what gets them into production, whether it's permitting and or finance, is the fact that they make a metal that's used in weapons. Is there a bit of a sort of conflict there?
I really don't know. That's a great question. I just know I work on supply demand in a lot of the things that I do, Paul, right? When I was writing for Sprott on palladium, I was pointing out that, in 2017, 7 years ago, about 70% of the world's palladium was being produced in South Africa and Russia, right? Huge number. Now it's 83%. So why is palladium trading this far down right now as a commodity? The ticker, by the way, for that is PALL. If people wanted to check out the ETF, but palladium is, in my opinion, trading this far down because Russia is selling palladium because they have to fund their war efforts, right? Like they have a huge amount of palladium. So like you look at that and say, gosh, this is probably a finite situation. Russia and Ukraine are going to be at each other for 5 more years. Like something's going to give here, right? So like at that point, the selling pressure on palladium, and for that matter, maybe platinum, goes away. So, we're trying to build positions into commodities like that, trying to look 1 to 2 years out.
Okay. John, let's finish by talking about some drill results. You pick one and I pick one, and coincidentally, they're both copper. Why don't you go first?
Interesting. Well, I saw Faraday Copper this week put out some good results in Arizona, and I have owned the stock since it was Copperbank, run by Gianni Kovacevic, and Gianni and I were talking last year at a conference, and he said, I still own my position in that stock because I think in 2024 they're going to start doing some more drilling, and here we are, right? And the results were well received. If you look at the stock, it was around 42.5 cents US, the ticker CPPKF, and it ran to 52 cents this week on decent volume. So, it's getting a bid on decent results and great jurisdiction. Also, Paul Harbage took over for Gianni. And as you know, Paul's been in the business a long time. He brought Russell Ball over from Caliber. I mean, they've got a deep bench there. So good jurisdiction, good management team. I like it.
I had the pleasure to visit that project early last year. The intersect there was 117 meters at 0.4% copper near surface, including 23.37 meters at 0.6% at the old reliable target in Arizona. I picked up on Camino Minerals, which reported 25 meters at 1.34% copper near surface at its Los Chapitos project in Peru. Not necessarily specifically because of that project, but more because the past week or so, there's been a number of copper explorers. It seems copper exploration in Latin America is starting to really sort of take off again. Tucana Copper, Copper Standard also began drilling programs in Peru, and Rugby Resources began exploration at its Mantu IOCG project in Chile. Well, John, we made it. That's it for this week. Thank you very much for joining us.
Always a pleasure, Paul. Thank you.
And that's all from me, Paul Harris, for Kitco Mining, digging deep. And if you like what you see, don't forget to subscribe.